Australia's principal financial institution hikes quotes, says coverage now not on pre-set direction. Sydney. Australia's central bank on Tuesday raised hobby fees for a fourth month running, but tempered steerage on in addition hikes as it forecast faster inflation but also a slowdown in the economy. Wrapping up its August policy meeting, the Reserve Bank of Australia (RBA) lifted its cash charge through 50 foundation factors to 1.85%, marking an eye-watering 175 foundation factors of hikes for the reason that may inside the most drastic tightening for the reason that early 1990s. Yet, RBA Governor Philip Lowe also made the outlook for policy greater conditional. The board expects to take in addition steps inside the technique of normalizing monetary conditions over the months ahead, but it is not on a preset route, said Lowe. That became taken as a dovish pass by way of markets given Lowe had time and again said the RBA board wanted to get charges to an impartial degree of at least 2.5%, wherein it theoretically would neither stimulate nor retard economic growth. Investors reacted through knocking the nearby dollar down 0.6% to $0.6977, whilst 3-year bond futures climbed 8 ticks to 87.250 because the marketplace trimmed bets on how some distance and rapid charges might in the long run upward push. Swap markets lengthened the chances on any other half of factor hike in September and shifted to imply a peak of round 3.31%, down from 3.41% before the RBA declaration. The assertion was on the dovish aspect of expectancies, suggesting that the dialogue at the September meeting can also well move again to the 25 BP or 50 BP debate, stated Adam Cole, a strategist at RBC Capital Markets. Lowe also updated the RBA's financial forecasts, announcing consumer rate inflation changed into anticipated to height around 7.75% as compared to 7% formerly and 6.1% inside the June region. Inflation turned into seen no longer visible, returning to the pinnacle of the RBA's 23% goal band till 2024. Forecasts for monetary increase had been downgraded to 3.25% over 2022, and 1.75% in each of the subsequent years. Previously the bank had forecast increase of 4.2% in 2022 and a pair of 0% in 2023. Keeping an even keel. Lowe had argued the financial system should resist the pain with unemployment at 48-year lows of 3.5% and task vacancies at all-time highs. Household demand has fared incredibly nicely, thank you in component to 260 billion Australian dollars, $178.59 billion in greater savings collected all through pandemic lockdowns. Yet, higher borrowing expenses are proving a heavy drag on spending strength given households owe 2 trillion Australian dollars in loan debt and domestic values at the moment are in sharp retreat after a bumper 2021. The hikes introduced up to now will upload around 560 Australian dollars a month in payments to the common 620,000 Australian dollars loan, and that is on top of surging bills for strength and food. Lowe has are available in for some criticism over the speedy collection of hikes, with one local tabloid calling for him to end his activity. Treasurer Jim Chalmers has defended the imperative financial institution's independence, even though he currently released an overview of policy making and the board to peer if it needed modernizing. Lowe himself on Tuesday conceded the financial institution changed into walking a narrow route among taming inflation and maintaining the economic system on an even keel.